Hi everybody, and welcome to the first week of this tax course. Just a brief introduction of Chapter 1. Taxes in this country are levied under a variety of methods. One is progressive, the other is proportional, and the other is regressive. Proportional is like a flat tax, a sales tax, and we'll talk about that in a minute. Progressive is what we use mostly for income tax purposes. So what is a progressive tax structure? It is a tax method of assessing taxation against citizens where the more you earn, the higher will be your tax rate. Proportional, as I mentioned, is similar to a flat tax where the tax rate remains the same for everybody, such as a sales tax. We'll talk a little bit in this course about average tax versus marginal tax rates. Average tax is the total tax you pay divided by your taxable income. That really reflects the true overall tax rate that you paid. Marginal tax rates is the tax that will be paid on the next dollar of your income, the marginal increase. And it's those rates that we will be referring to quite a bit in the course. The very basic formula, which we will be expanding on throughout this course, is the income tax formula, where we start with our gross income, deduct any permittable deductions. That gives us our taxable income, multiply that by the appropriate tax rates, and we have what we owe to the IRS and to the federal government, the tax liability. We'll deduct any tax payments and any credits that we have coming, and we wind up with our comparison between what we paid and what we owe. And if we overpaid, we get a refund. If we didn't pay enough, we'll owe. So to use the 1040EZ, the taxpayer must meet all the following: must be single or married, filing joint, under 65 and not blind, no dependents, taxable income less than $100,000. Income can only be from wages and unemployment compensation or interest income less than or equal to $1,500. And they can claim no credits like the lifetime opportunity credit for folks going to school. However, if they are receiving the earned income credit, then they still can use Form 1040EZ. So what is income then? Wages, salaries, tips, commissions, bonuses, severance pay, sick pay, meals, lodging, etc. And so we receive W-2, don't we, usually by January 31st of the following year. That gives us some information regarding the amount of earnings and withholdings that we had during the year from our employers. If we had interest income, then financial institutions, for example, would send us 1099 INT, and if we have enough interest income, we have to report that. Unemployment compensation, if we were laid off, for example, and we received unemployment benefits, we'd have to report that, and we'd get a form from the state, usually from the state of Wisconsin in our case, on 1099G. Permitted deductions for 2017, which is the tax year that we cover in this course, is $10,400 for single and $20,800 for married. And then the total income minus any permitted deductions, as we said, gives us taxable income. So taxable income up to $100,000, we are permitted to use the tax tables, and they're much easier to use than the tax schedules. With tax schedules, we have to make some calculations. With the tax tables, we get to just look up the amount on the table, and that gives us our tax liability. Although the tax rate schedule calculates the tax more precisely, the difference is usually negligible. And when we file our tax, it's really like settling up. It's us kind of reconciling what we paid with what we owe at the end of the year. And if, as I said earlier, if we overpay, we get a refund. If we underpay, we have to write a check to the IRS. In terms of tax authority, we have three basic types of, or primary tax authorities in this country: statutory, administrative, and judicial. The statutory resources result from the passage of the 16th Amendment to the U.S. Constitution. As far as administrative sources of tax authority, we have Treasury regulations, IRS regs, revenue rulings, revenue procedures, private letter rulings, and IRS notices. We'll talk more about some of these throughout the course. Then there's the judicial sources of authority, where if there's a dispute or disagreement between what taxpayers feel they should owe the IRS and what the IRS feels they owe, then this is adjudicated and settled in the correct tax court of jurisdiction, and it'll be either the tax court, the U.S. District Court, or the U.S. Court of Federal Claims. That's a brief overview then of some of the highlights of Chapter 1. I encourage you to go through all of the PowerPoints that are presented in Connect, as well as some of your other resources.